While the whole world seems completely obsessed with the latest flashy headlines about ChatGPT and general-purpose GPUs, there's an entirely different story playing out quietly behind the scenes. Welcome to this explainer. Today, we're diving right past all that noise to uncover the unsung infrastructure giant that is literally powering the artificial intelligence supercycle. We're looking at a company that isn't just, riding the AI wave, it is fundamentally engineering the custom silicon that makes hyperscale computing even possible. We are talking about Broadcom. So, let's run through our agenda real quick. We're going to cover 1. The hidden AI giant, 2. Architecting AI's backbone, 3. Explosive financial growth, 4. Capital returns and dividends, and 5. Valuation and future outlook.
All right, Section 1, the hidden AI giant. Let's figure out exactly who Broadcom is and why they're such a massive, yet surprisingly quiet force in the tech world.
If you follow tech even a little bit, you're probably asking yourself, okay, what makes Broadcom fundamentally different from a juggernaut like NVIDIA in this massive AI boom? And it's a great question, because while the market totally obsesses over NVIDIA's widely available merchant GPUs, Broadcom takes a completely different, highly specialized approach to solving massive computational needs. Basically, they don't want to be everything to everyone. They want to be the exact right thing for a select few.
Think about it like this. On one side, you have merchant GPUs. These are fantastic, general-purpose chips designed to handle a huge variety of AI tasks. But on the other side, you have Broadcom focusing strictly on custom ASICs. Rather than selling off-the-shelf processors, they build custom silicon specifically tailored to make a single hyperscaler's unique data center run as incredibly efficiently as possible.
So the absolutely crucial thing to understand here is the ASIC, or application-specific integrated circuit. If a GPU is a highly capable Swiss Army knife, an ASIC is like a surgically precise scalpel. It is optimized for one single, very specific application. When we're talking about massive, planetary scale, these custom-designed microchips act as the hyper-efficient plumbing you absolutely need to train and run giant AI models affordably. They just offer vastly superior energy efficiency and cost effectiveness. Moving on to Section 2, Architecting AI's Backbone. Let's see how exactly it relies on this custom plumbing. Honestly, the sheer scale of their client base is just staggering. We are not talking about small startups here. Broadcom is reportedly developing custom AI accelerators for at least 6 major players. They're the architects behind Google's TPUs and Meta's MTIA. Plus, they have deep partnerships involving Microsoft, Amazon, OpenAI, and Anthropic. They are literally the go-to partner developing custom hardware for the absolute biggest names leading the entire AI charge. And because of these deep, integrated partnerships, where Broadcom is in the trenches designing the exact chips that make these platforms function, analysts project this company is going to outright dominate the custom silicon market. In fact, projections show them capturing an astonishing 60% of the custom AI ASIC market by 2027. That is a massive structural moat. Let's dive into Section 3, Explosive Financial Growth. We know they're architecting the internet's backbone, but how does that actually translate into hard revenue? Just let this number sink in for a second, 68%. In fiscal Q1 of 2026, Broadcom reported a staggering 68% adjusted EBITDA margin on over $19 billion of record revenue. Just pause and think about that scale. They aren't just generating massive top-line sales, they are converting it into pure earnings at a rate that most hardware companies literally only dream of. And their growth trajectory? It's just wild. Their AI semiconductor revenue in Q2 of 2026 hit approximately $10.8 billion. That alone is a 143% surge year over year. But management isn't even close to stopping there. CEO Hock Tan has outlined a super aggressive, yet structured path to hit over $100 billion in annual AI chip revenue by fiscal 2027. Now, you might be thinking, come on, $100 billion? That's just pie-in-the-sky optimism. But this growth is actually structurally supported by hard facts. First off, they are sitting on a massive $73 billion AI compute backlog. Second, they have an ambitious target to ship over 10 gigawatts of AI compute capacity in 2027 just to meet this insatiable data center demand. And third, we can't forget their recent VMware acquisition. The software side of the business provides highly stable recurring enterprise revenue that basically acts as a perfect stabilizer alongside all that explosive hardware growth. All right, Section 4, Capital, Returns, and Dividends. Usually, hypergrowth in tech means zero dividends, right? Well, Broadcom is the exception. They maintain a very comfortable 38 to 41% dividend payout ratio on a cash basis. Even while they're aggressively funding their massive AI backlog, they somehow have plenty of capital left over to reinvest in their business and return actual cash to their shareholders. It's an incredibly rare blend of high growth and reliable income. Honestly, this is one of the most shareholder-friendly operators out there. They've got a track record of 15 consecutive years of dividend raises. In Q1 of 2026 alone, they aggressively returned nearly $11 billion to shareholders. That breaks down to $3.1 billion in dividends and a massive $7.8 billion returned via share buybacks. They're shrinking the float, raising the dividend, and still growing revenue at lightning speed. It's pretty incredible.
Which brings us to our final section, Section 5, Valuation and Future Outlook. With explosive growth and disciplined capital returns established, does buying at these levels actually make sense?
Let's break down the valuation, because it's a bit of a puzzle. If you just look at their trailing price-to-earnings ratio of 62 to 66 times, yeah, it appears elevated, expensive even. But when you factor in their rapid earnings growth, the forward PE drops all the way down to the mid-20s. More importantly, their PEG ratio, which measures price and earnings against growth, is actually under 1.0. This suggests that relative to its 30% projected growth rate, Broadcom might actually be undervalued compared to other pure-play AI hype names out there.
Despite already trading near a $1.87 trillion market cap, the consensus from major analysts points to a massive structural moat that absolutely warrants a higher price tag. They're estimating fair value anywhere between $500 and $650 a share. That implies a really solid 25 to 35% upside from recent trading levels around $390 to $400. Now let's be real for a second. Objective due diligence means we have to monitor the risks, right? No stock goes straight up forever. Broadcom is definitely exposed to potential supply chain bottlenecks, though management says they feel secure through 2027. There's also rising competition in the ASIC space from companies like Marvell, or the lingering risk that these massive hyperscalers might just decide to design entirely in-house without a partner. And finally, we always have to watch out for cyclical pauses. If tech titans suddenly pump the brakes on their massive capital expenditures, Broadcom's backlog could definitely take a hit. But when you weigh those risks against the realities of today's market, the core takeaway is pretty clear. Broadcom isn't some speculative software moonshot. It is fundamentally laying the digital pipes for a multi-year trillion-dollar supercycle. It is an infrastructure bet on the digitization of everything. So as you review your own portfolio and process this incredible growth story we've unpacked today, I want to leave you with this final thought. While the big, flashy headlines chase consumer apps and general-purpose chips, you really need to look at the plumbing. As the trillion-dollar AI infrastructure supercycle unfolds, who is truly powering the future of your tech portfolio? Thank you so much for joining me for this explainer, and as always, keep digging into the data.